Hey guys, welcome back to another video. So in today's video, I wanted to talk about a recent trade that I put in that has the potential to turn $600 that I put in into around $2,000. And this is a video that is going to be picking up on a video that I recently made about call debit spreads. So in this video, I'm going to be talking about call debit spreads as well as the trade that I put in that has the potential to basically give me about a 400% return. So if you're new to the channel, be sure to subscribe and leave a like on this video to let me know that you like it. Also, I've been thinking about making some more detailed videos about reading financial statements such as income statements, balance sheets, and cash flow statements. I've made general videos talking about that in the past, but those videos weren't as specific as I think I could get in terms of breaking down step by step each segment of those financial statements that are so crucial when it comes to investing in the stock market. So if that's something that interests you guys, be sure to let me know down in the comments section below, and let's get right into this video. So I'm going to open up the trade that I made, and the stock that I used to make the trade was Microsoft. So you can see right here that I opened up a call debit spread about maybe a week ago or 2 weeks ago around that time. And it was from Microsoft, and the call that I purchased had a strike price of $302.50, and the call that I sold had a strike price of $305. And so basically, for those of you who don't understand how call debit spreads work, I would definitely incentivize you to go check out the video that I made about it previously. But just to recap, the way call debit spreads work is you essentially buy a call option and then sell the call option above it. And so long as the share price for Microsoft is above the strike price for the call option that you sell by the expiration date for the contract, which for this contract is September 3rd, then the full potential profit for opening this call debit spread will be given to you. So I'm going to open up view all options here just so I can break down in detail what kind of trade I made here, what exactly I did, as well as how much I'm risking and what my potential reward is for this upcoming week, depending on where the share price of Microsoft ends up. So you can see right here, we are now looking at the options list for options expiring on September 3rd, which is the Friday of the week that is coming up. And right here, you can see where I opened up the call debit spread. So the call option that I purchased had a strike price of $302.50. And right now it's sitting at a premium of $120 or $1.20 per share. And since with options contracts, you're always dealing with 100 shares, you multiply the premium on the right by 100, and that gives you the total cost of what it would be to purchase or sell the options contract. If you were purchasing it, you would be paying the premium. If you were selling it, you would be receiving the premium. So right here, this is the options contract that I purchased for my call debit spread at 302.5, and I purchased 13. Now, right now I own 13 call debit spreads within this range of 302.5 and 305, but I did not start out with 13. I opened this spread for the first time, I think on, I believe it was like August 20th, around that time. And so at that time, I didn't purchase 13 and go all in. I only purchased about, I think it was 7 call debit spreads. And at the time, Microsoft's share price was around 300. No, it wasn't around 300. It was around like 302, I would say. So the spread back then was worth about, I would say, $130. But as you can see today, the spread is only worth $53 or 53 cents per share. Again, since with options you're dealing with 100 shares, whenever you see the premium, you multiply that number by 100 to give you the total cost of what it would take to buy or sell or open the spread for the options contracts that you're dealing with. So when I bought this at $130, Microsoft's share price dropped after the fact, and it dropped now to about $2.99. And I actually ended up buying. So I've owned like 7 call debit spreads for this range previously, and then I bought an extra, what is it? Like I bought an extra 6 essentially, but I ended up buying them at a lot cheaper than 53. I bought them at 49, so I bought them like right around here, which was on Friday, 2 days ago. And when I did that, it brought my average cost per spread down to, where is it? Down to about 74 cents per share. So about $74 total per spread. And since I have 13 spreads, you just multiply the 13 by the average cost, and that was my total cost, which is about $280 above what the current market value is. So at the moment, I own 13 of these spreads, and they are valued at $53 per spread, giving me a total market value of $689 at the moment. And so I am down almost 30% here. I'm down about $280. And my total cost was $969, as you can see right there. And so if we open up the View All Options tab, we can actually see how much profit I would pretty much seek to gain if everything goes right and the share price of Microsoft rises above 305 by Friday's end of next week. So if I were to just simulate opening up this call debit spread right here, I would just buy this options contract and then sell the one right above it. This would show me what my total cost is to buy into it today, which is 53 cents. That's what it's currently valued at. And you can see right here, it says max loss. So max loss is what you pay to get in. So it'd be about like $53 or $54. And then the max profit is the number right here. So it would be $196 for every $54 that I put into this. And so hypothetically speaking, just to visualize what this would look like for the 13 spreads that I own, if I click on continue right here, it'll bring up this little menu right here, and it'll give me the option of, it'll tell me, I can tell the menu how many spreads I want to buy. I can tell it, what the limit price is for how much I would want to spend in order to open this trade. And then I can also say, how long I would want this this ask to last in the market. I could either have it last till the end of the market day at 4 p.m. tomorrow, or I could have it last for 90 days. Typically, you would usually just do the good for one day when you're dealing with options trades like this. And so, for example here, I currently own 13 spreads. So if I were to put 13 into this number right here, it would show that the max cost today would be $702, right? Which is approximately what my 13 spreads are worth today. And it's worth $702, and my max profit, if everything goes well, by Friday, if the share price of Microsoft is above 305, my max profit would be $2,548. And so basically I would receive everything that I spent on for the spread plus the $2,548. So that is a massive return that I would receive in a little under a week if the share price of Microsoft rises above the strike price for my debit spread, which is $305. And I can also right here in the limit price section put how much I would be willing to spend to get into this debit spread. So at the moment, it's just defaulted at about 54 cents per spread. But let's say, for example, that was a little bit too expensive for me and I wanted to only spend 40 cents. Then I could drag this down and then just put in 40, and my max cost would be 520, and my max profit would be $2,700. So you can play around with this on your own in Robinhood. It's definitely a risky trade because nobody knows what direction Microsoft is going to go in. However, the reason why I opened this trade up at this point is because if you look at Microsoft's chart, you can see that over the last week it's actually been on the downtrend, and over the last you can see like in the 3-month chart right here, it's been declining since August 23rd. And so the whole idea of buy low, sell high, you buy low and then based on market trends anticipate where the share price is going to end up. This is sort of just like a little short-term gamble that I'm only using like, you know, less than 1% of my total account value to make. But if it does go through, then I seek to gain a lot of profit that would actually end up being about 10% of my account value. So that's it. Thanks for watching.